Welcome everyone to the EIT Health Investor Network roundtable on the subject of pre-money valuation and how to better negotiate when you're on either side of the table as an investor or as a startup, this very important point in any due diligence. So we are thrilled to have our panel with us today. We welcome, of course, our moderator, Alain Pujol, and I will introduce him a little bit further. And of course, we have three of our investors. We have Viva Biotech, represented by Daniel Mao. Thank you so much for being with us from Shanghai. We have Raúl Martín-Ruiz from Ysios Capital from Spain. And of course, Franck Lescure from ELAIA in Paris. Also would like to welcome Dominik Schumacher from Tubulis in Germany. Tubulis is an alumni company from the Investor Network that successfully raised a very nice Series A round of 10.7 million euros a year ago and is preparing their Series B. So Dominik will have a lot of interesting feedback for us. Before we start, allow me to remind you that the EIT Health Investor Network is a program that is here to really help European healthcare startups raise seed and Series A equity rounds with our 80 plus investors from across 17 countries. So if you are a startup fundraising and in healthcare in early stage, check out our webpage or contact us for more details about the program. So without any further delay, I'd like to thank, first of all, Alain Pujol, who will be moderating this session. Alain is a board member and active biotech investor from Angel Santé, one of the largest business angel groups in Europe, dedicated to healthcare, human and animal healthcare investment. And Alain is also a well-known consultant in open innovation. So thank you, Alain, for leading this discussion today. And of course, we have Ysios, one of our investor network member from Spain. Ysios is a venture capital fund in biotechs, mainly Series A, and is represented today by Raúl Martín-Ruiz, a partner, and who has been with Ysios for, I think, the past 10 years or more. So a big welcome, Raúl, and thank you for being with us today. I'll also let Daniel Mao from Viva Biotech in Shanghai explain to us a little bit more about him and his firm. Thank you so much.
European Union, and then myself, background has mostly been in finance. Degree-wise for science is biology, like half from undergrad, and then for the last 10 years, mostly in investment banking or investment banks that have focused on early stage investments and mergers and acquisitions, respectively.
Okay. And your company, Daniel, is a CRO, also investing in startups. Could you tell us a little bit more about the activity of your corporate?
Mm-hmm. Yeah, I think as part of our strategy, we call it our double engine, is to basically incubate and invest into companies as well as provide service. So we not only provide the cash investment, as well as we also provide the incubation services, including the company setup sometimes, as well as providing the actual services to help with that early stage investment, that early stage company to actually develop their drug candidate, basically.
Okay, thank you so much, Daniel. Franck, would you like to introduce you?
Yes.
Yes.
First, I will speak about ELAIA. ELAIA is a venture capital company. We have been funded in 2003. It's now more than 30%, 60% of women with 3 women partners. The age is between 23 and 65 years old. And the background of the team is mainly entrepreneurs, researchers, finance, industry. We have more than 10 nationalities in the team. And right now we are built in 2 business units. One is digital venture, with funds investing in deep tech, digital B2B mainly, from C to Series B. And we have another business unit, more recent. We have created this business unit in 2008. In 2018, so 2018. And these business units is managing funds which are in partnership with the academic institutions. So mainly it's seed investments, both in digital, industry, and life sciences.
Okay.
We have right now 3 funds active, making primo investments, and we have 4 other funds under management, which are portfolio management basically, and we have all in all 450 million euros under management.
Thank you so much, Franck. So we are now a lot of people attending. Some of them are entrepreneurs, some of them are investors. So I would like to ask each of you, why is valuation an important topic? So we should probably start with the view from Dominik. Why is valuation important for Tulip and for you? Tell us.
Yeah, I mean, so why is valuation important? That is a really good question. And what I really would like to point out here is that obviously it's important because it paves the way towards the entire endeavor of your company, and also how you are positioned in that company as a founder. But I think that what is also really important is that you try as founders to get a true view of what is actually currently going on in the market. And we can discuss that a little bit later on.
Will do.
That I sometimes have the feel it's important, and I don't want to say it's not important, but it may not be as important as you think in the first second when you think about investments. And let's discuss that later on as well, because there are other things that can even hurt more severe than evaluation.
Okay. So Daniel, what is your view concerning valuation? Why is valuation important for a corporate venture?
Mm-hmm. Yeah, I mean, I think especially for a biotech company, like going through that entire process, having a strong valuation and basically hopefully a linear growth from, obviously relatively lower to higher over the course of that entire life cycle is good for that company to help with healthy growth and to basically raise money at, reasonable prices for the entrepreneur to actually grow that R&D and grow that, drug candidate, basically.
Excellent. Thank you, Daniel. Raúl, would you like to add some more on that?
Sure. So, well, obviously, it's an important topic that's clear, right, for all the parties. The entrepreneurs, typically see this or mainly see this, from a dilution point of view. But, the VCs, I'm a VC here, so I can explain how we look at it. The VC has what I call a more complex or more sophisticated approach to valuation, right? So obviously the dilution or the stake in the company will be relevant for us, but we also have to take into consideration the expected exit value, the return, risk profile, and also, importantly, the pre-money that could be feasible to accept by new investors in the next round, right? So these are just a few hints, but just to try to explain that it's important, but that for us it's a complex thing. It's not just
okay. Thank you, Raúl. Franck, would you like to add some more thinking concerning that?
Well, I will not be so different from Raúl because basically the idea is that as an investor, a VC is considering the valuation where it's entering in order to make money after that. So the valuation is important for this point in the consideration of VC. But then there is another consideration, which Raúl explained very well, is that if you are too hard on the valuation, meaning a low valuation when you enter, you may demotivate the entrepreneur. And this is very important because as an entrepreneur, to be strongly diluted at the first investment is something which is very hard to understand. So this is the first point that makes us discussing about valuation more strictly than only a point of view of the return that we may make. And the other thing is that we will have additional rounds of financing. And in the scope of this round of financing, we have to consider the valuation at which we are at this round of financing. Because if we are too high, then it's going to be difficult at the successive round of financing.
Okay.
So it's an important topic, yes.
Yeah, that's very important. That was also my second question to all of you, because basically when you start to raise money, say, okay, as an entrepreneur, my company is probably the highest value ever. So you live every day with your company, you live during the night with your company, your family is living also with the company. And at the end of the day, the value of what you are managing on a daily basis is, there is no value. It's really very, very important. However, I would like also having a high pre-money valuation for an early stage company. Is it a good news? And you, Franck, you already say something concerning that. And I'd like to have also the point of view from Dominik and Raúl and Daniel concerning it. Dominik, did you have a very high pre-money evaluation during your first round or not? What do you think?
Yeah, we were quite happy with that. And the thing is, I mean, which is really, something is really important here. When you discuss valuation, first of all, you need to look, and that is what we actually did. We looked at what are deals currently what kind of deals are currently happening, what is out there, what are similar companies, and what direction do we want to go, and how do we want to build that company? What is our vision for that company? And this is really key, because if you have that vision already in mind today, that is really making a big decision on what kind of financing round you are building. So do I want to go the drug development route? Do I want to go for that? For us, yeah, for us, we clearly decided Tubulis. We want Tubulis to be not a one asset company. We want it to be a diversified ADC player, becoming an international ADC player. And making that decision has a key important fact on the valuation and what kind of investors you should take. So that is the first thing that I always would do. Get a view on the market, what is happening, what are similar companies, what are the evaluations there. And there are tricks to find out their databases. And I think it makes sense to go there and just get as much information as possible. And that is what we did there. And then also something really important is get momentum. Try to get as much momentum as possible, because in the end, it's your responsibility to get to a point that you can also maybe have, in the best way, have an option to decide what kind of syndicate do I want to go with. This has a positive impact on potential evaluations, not to an unlimited extent because of the things that already were mentioned by Raúl and Franck, but it helps. And it also helps because you need to be able to find a syndicate where you believe I can build that company that I was visioning for.
Okay.
So yeah, that is.
Yeah. So thank you, Dominik, for this point of view. And probably Raúl or Daniel would like to add some more things to what Franck just introduced as really having not a too high pre-money valuation right from the beginning. Raúl, would you like to comment?
Sure. So, I mean, if the question is if this high pre-money is a good news for the early stage company, I mean, obviously, I'm sure it will be a good news for the entrepreneurs at that time. So when the valuation is set, but not necessarily for the entrepreneurs and for the company in the longer term. And I think that Dominik already mentioned some aspects, right? So the thing is that in most of the cases there will be more rounds. I already explained that. And at that time, you can face a real problem if the post-money was too high, right? So I really believe that it will be detrimental for the company to accept a downwards adjustment in the valuation in the next round if it was just because the last post-money was too high, right? And then no specialized investor could accept that pre-money, right? It would be different if you are targeting other type of investors, but if you want to build the company in the best possible way and you are going to target specialized VCs, it can be a real problem, and it will not be good news that that valuation has to go down, even though the company didn't fail, right? Just because the pre-money was high.
Okay, thank you, Raúl.
Yeah.
Daniel, would you like to add some more points to that?
Yeah. Yeah, definitely. I think Raúl touched upon it very well, and basically kind of to expand on that. A lot of times, as for the further rounds that we have, we actually basically help our entrepreneurs, like basically the Series A, Series B, to kind of choose which investors let in. Obviously, the ones that are more successful. And to be honest, some of the times they aren't necessarily the highest term sheet or highest value term sheet, because there are a lot of, I guess you can call it, different types of investors. And some really, in all honesty, might be more suitable for your type of company in that regards to both support from like a board level or even just further financings down the road. So if you were to say, for instance, want to look for a IPO, say for in the US or some other markets, having that kind of right mix of investors and having somebody that actually believes in that in your I guess your pipeline and your progress and your development, it can at times be more important than the actual valuation from that term sheet and help you grow better, basically.
Okay, thank you, Daniel. Just as a planning point, we'll have at the end of our session a Q&A, so during around 10 to 15 minutes. However, if you would like to comment or to ask specific question in the chat, you can do that right now. So please feel free to do it. So again, we are really happy today to have different types of investors, different types of animals. So the VCs, the corporate VCs, and I'd like also to have concerning our subject today, the view from each of you. So maybe Franck or Raúl, can you comment the difference between a VC and a corporate VC according to you? What do you do that the corporate VC would not do, and the other way around? No.
I start?
Oh, Franck. Yeah, just
start.
No, Franck, that's fine. Just do it.
First, I wanted to make an additional remark to the previous topic.
Okay,
to have a high valuation is not always a bad news. It's not always a bad news. Sometimes it's a very good news for the company and for everybody. So not saying that, but just that you have to consider all the parameter when you have a high valuation for a firm. So about the difference between VCs and corporate VCs, I would say that, but I'm not a corporate VC, so it's very easy for me to speak about corporate VCs. Yeah, but I have been working in a big corporate which had a corporate VC. It was the group Air Liquide. So I've been part of that, and I've been working with a corporate VC at Air Liquide sometimes. I would say that the corporate VCs is usually, not always, but usually to sustain a strategy, the strategy from the corporate. And so there is a focus, and there is an area of investment which is coherent with the strategy of the group. In the case of the pure VCs, it's only a matter of investment and technology innovation, which has not really a strategy, a corporate strategy. This makes the difference between some, for example, the sensibility to the valuation of the company. Sometimes I would say a strategic investor would be less sensible to the valuation, but it's also a way to act in the governance of the company, because in the governance as a board member, we will have only in mind as a VC the pure development of the company without any consideration of area of application, while perhaps sometimes a corporate VC may have some, not intention, but I would say a tendency to say this area is the best one compared to the other. Okay. But then after that, having said that, I didn't see so many difference between corporate VC and VCs. Okay. It was to find some differences. Okay.
Thank you for your answer, Franck. Raúl, would you like to add some more things, or has Franck developed everything?
Just some quick comments. Obviously, I have not worked in a corporate VC either, but we have, as a firm, we have co-invested with more than 20 of them, right? So
Okay.
the first difference I always make between corporate VCs is if they are strategic, as the ones that Franck was mentioning, or if they are purely financially driven, right? Because there are some of them that are purely financially driven, and those are, I would say, almost exactly like normal VCs, right? So I have not seen, at least in my experience, any different change and any different point of view between financially driven corporate VCs and specialized VCs like us on the valuation topic. Obviously, if we are talking about the strategic VCs, as Franck said, that might be a different story.
Okay. So Daniel, now we heard Raúl and Franck introducing corporate VCs. Are you happy with that? Do you want to hire them to expand your power or not? Daniel, tell us.
Yeah, I guess as a corporate VC, we do. Yeah, definitely. It really depends. I think we have had a couple investments and actually successful investments with a corporate venture capital arm of some of the big pharmas. In that sense, it's really a good basically I guess you can call it a certificate of or a vote of confidence from that pharma. And in some senses, they have other strategic interests in bringing that company either into their pipeline later on. And for us, being a corporate VC, it also is, there is definitely a strategic fit and a strategic, I guess, motive or strategy overall for the corporate venture capital for most times. But I think, for an entrepreneur, I guess, an advice would be to kind of understand where that corporate VC is coming from and kind of their motives and their overall goal, especially with some of the pharma backed strategic fit, to kind of understand where their interests lie and where, whether it be modality, indication, or et cetera, or stage.
Okay. Thank you, Daniel. And by the way, we had a question concerning that, how to consider combining VCs and corporate investment in the same round. And you probably, your answer, Daniel, was right. You can do that, no doubt. Very good. So now we had also questions concerning methodology, fair valuation. So my next question for you will be how to establish the right pre-money valuation for a biotech company. Dominik, what did you do before raising money to establish your valuation goal?
Yeah, that's a really good question. And the thing that I want to just say is, because I read it now several times also in the questions, something that I don't really see for any company valuation is a standard way of doing it. And I know this is also something that is often used from the investor side, saying that is industry standard, that's how we have to do it. We can't do it differently. And the same holds true, I believe, for the startup side. It's not always standard, and you really have to, and this is again what I mentioned before, you have to look at your individual company. So what do you want to do? Where do you want to end up? A medtech company, it can be two completely different things. One medtech company that will burn cash the next 6, 7, 8, 9 years using 50 million euros, and then there will come a hockey stick, and another one that will just need 3 years. And this you really need to take into account of your valuation and what you want to have. And I can really encourage you to do two things. At least that is what I did for Tubulis, and what I also always do when we invest via our family office. Look at what is going on out there. Look at the market value. And this is changing. I mean, and this is also highly dependent on where you're doing, where your company is located. Is it in the US? Is it in Europe? Is it in different areas of Europe? Then also try to get as much information from there. And then you have to do the waterfall. Do an Excel file and calculate that through and check what are the next years bringing to your company, and where do you feel comfortable? What is the situation that you feel comfortable with? What is your absolutely lowest limit where you say, okay, my incentivization is just gone, right? Okay. And that you really have to look, and this you should know. And then if you know that, you are well prepared to actually start discussions. And then again, it's not only the pre-money valuation. What can actually also hurt very bad is liquidation preferences, right? So it's not only the valuation that keeps your shares and keeps you incentivizes. And then there are other ways of getting additional incentivation back to the management of the companies and to the founders. And it's really, I also don't like when you hear things like, this is the maximum post-money valuation that we can do because it's standard in the industry. And if we are beyond that, then we will not close a financing round anymore. I mean, I know it's really hard also to argument against that, but it's really, you need to get as much arguments from what is happening in the real world and try to get a true view of the current market, and then try to have it in a way, set up in a way that you believe this way we can build the company together. And this, I'm a big fan of that. You need to have the people on board, and this includes the shareholders and investors.
Okay.
That you believe in to build the company together. And this is as important as the valuation.
Okay, thank you, Dominik. Raúl, would you like to comment? How do you value? What methodology are you using?
Yeah, well, I think that there's not much more to comment, in fact, to what Dominik said, and Dominik has the advantage of, having been on both sides, right? So I already mentioned how we look at this from the VC perspective. I mentioned that before, right? So we look at the whole journey from the seed investment to the exit, and we have to look at the expected exit value, the return, risk profile, feasible pre-money for next rounds. And what I always suggest the entrepreneurs is to do that exercise on their end as well, right? So obviously we have to put ourselves on the shoes of the entrepreneurs, but they also have to put on the shoes of the VCs, right? And then that will probably help to understand the position of the other party and to find the right arguments for defending the proposed valuation. But if it's right or not right, I mean, I think it's a very difficult difficult question.
Okay, Franck, would you like to add some more advice?
Well, advice, I don't know. What I know is that...
Or what you do
yeah.
in terms of negotiating with biotech companies.
Yes, it's exactly that. It's negotiation, basically. I mean, there is... the more the company will grow, the easiest it's going to be for the valuation estimation, because there are more things inside the company, etc., etc. When you consider an early stage company, it's very difficult, because it's only what the accountants are qualifying as goodwill. It's only goodwill. So there is no real things inside the company besides articles or preliminary experiments, but nothing real. And so you have to discuss that with the entrepreneur. So basically it's a negotiation. And taking again what Dominik said, there are trends in valuation, and you have to consider that. And I must say, I've been doing this work for 17 years now, and I've seen several cycles of trends about valuation at the early stage. And right now, for example, there is a trend.
Yeah. Where do you find this information, Franck? Where do you find this information? That will be also an advice for entrepreneurs who are not really aware.
You don't find this. We see 1,000 projects in a year. So we know the thing, and probably we are the source of the information. Okay. It's not something that you can find in a database. What I can say, for example, now we are talking about digital healthcare.
Okay.
I can tell you that there is a trend link related to the digital trends, which is pushing for a high valuation at early stage. And there is a situation right now where you have two kinds of VCs. The VCs coming from the life sciences, they are still in the same trend of valuation, which are quite low because there is not so much things inside the company. And there is a trend of the digital actors, which are in a huge competition because there are so many in the place. So they are battling together on the valuation are going high on high on high on high. I'm not saying that it's a good trend, but it's a trend and the valuation are following this trend. So for me, it's pure negotiation.
Okay.
And I do agree with Dominik that it's not only a question of valuation. It's a question of confidence between the actors, between the entrepreneur and the investor. And it's a question also of the modalities of the investment, the shareholders agreement that will happen at the end with liquidity preference and all these things. Okay. And so it's all a matter of negotiation at that stage, especially at the early stage.
Okay, thank you, Franck. Daniel, would you like to add some more topics on the way you really do your job on valuation?
Yeah, I think that, I think the other panelists definitely put it very well. Like, it is a complex problem, as Raúl said, and Franck, as he has also put in, the cyclic trends, especially with the, medtech and I guess for us, a lot of the AI-driven drug discovery platforms being influenced by the tech valuations and bring that up. But for us, I think one of the, a lot of entrepreneurs and just a lot of the, either investors or entrepreneurs themselves, that, a lot of one method, I guess you call it, that they buy into relatively more so is a comparable company. So if you are able to find, say, for instance, an asset sale of this particular type of drug, of an asset in the pipeline that was, has some public information, say, for instance, Merck bought this asset for XX amount of money, or some databases, sometimes on the internet, they do have a little bit of information on, say, having a Series A or Series B, what the valuation was. You can kind of at least have a sanity check or have a kind of a back calculation from those kind of data points, and that can help you extrapolate a more reasonable, valuation. In that regard, I think a lot of people will buy that information better as opposed to some of the other methodologies, having something that's directly comparable.
Okay, thank you, Daniel.
Can I quickly add one thing, because we were discussing about Frank said it's mainly negotiation, and that is actually true, and that's why I say there's not a standard way of doing it. But I think, and how I usually like to do negotiations is always, I want to have options, and I want to offer options. So having options is helping you in negotiating, and there the best options would be you have two term sheets of two syndicates that you both think they are great, and I can build the company with them. And the second thing is of actually offering options is you need to really think clear about, okay, what is actually hurting me and where is my no-go line and what do I want to achieve? Higher valuation. So what is the goal by having a higher valuation? You want to have more share and you want to participate stronger in an exit or in cash flow coming from the companies to the shareholders. Or you want to have more influence in making decisions. You need to be clear about that. And then decide on two options that are equal for you. Find those two options. And then you say to your negotiation partner, okay, guys, this is really important for me. Otherwise, we need to find a solution here. And I have two options for you. And both options are for you equal. And it helps the other party to actually get a step towards to you because he has two options. And one may be less hurtful for him. And this is just something that I would advise everyone when you go to in any kind of negotiation. Okay. That's how I prepare my negotiations.
Okay. Thank you, Dominik, for this very practical advice. When you introduce yourself, you mentioned, Daniel, that you invest in China, you invest in the US, and now you are approaching Europe. Thanks to the investor network. Raúl, also, you told me that you have invested in the US. So I'd like to have your views probably concerning the differences between the different regions. So concerning value, US, China, Europe, and even in Europe, north of Europe, south of Europe. So what is your thinking concerning that? Daniel, would you like to start first?
Sure. Yeah. I think what I'll do is I'll comment on China and the U.S. as those are, I guess, the most the ones that we're familiar with, and have Raúl, comment on Europe.
Okay.
So for us, there is quite a big of a very significant and clear difference in valuation between the U.S. and China, and China being a lot higher for the same type of quality project, same type of development stage, same type of management team, etc. So all things equal, China is a little bit more higher valuation, and part of that is mostly two reasons: just a number of, I guess, investors and entrepreneurs, and that kind of supply demand portion. And then the second part is basically a lot of the valuation is driven by the secondary market, the IPO market, and the public market, so the stock exchanges in China, which are just overall from a pure, a math standpoint, you can look at it. The ratios, the multiples are a lot higher. And so that kind of reflects, trickles all the way down to a lot of the companies in the private market for the biotech stage, even in China. And that does lead to, at least I'd say, I'll give two numbers. One number is just at least for the IPO, the IPO multiple that you're able to get for a Chinese biotech and a US biotech. If the same biotech, if you were to list on the US, you get, say, for instance, a 20x multiple on your for whatever multiple. That would be 2x, like 40, double if you were to do the same amount of listing in China. And that kind of, that's kind of the reason why. Yeah, it's a lot harder. There's a lot more complex things that go into it because you have to be approved to list in China and the Asian market. But that being said, it obviously has some effect on that in the earlier rounds because of the step up for each round.
Okay, thank you, Daniel, for these views. Raúl, would you like to comment also between the US and Europe, and maybe Franck as well? So, Raúl.
Sure. Well, first of all, I was not familiar at all with what's going on in China, so this was very, very interesting for me.
You all need to go to China.
So, I mean, in our case, I mean, we have co-invested, as you said, Alain, we have co-invested across Europe. That means North, Central, and South, not Eastern Europe for the time being, and also the US. But in the case of the US, none of our investments, we've done several investments there, but none of them were seed stage, right? And I think this is the main matter of the discussion today. So I cannot comment much on the seed stage in the US. Of course, I think that everybody here knows that valuations of more advanced companies are in general much higher in the US, and I think that's still valid. But then when it comes to Europe, these days, I don't see relevant differences.
Okay.
I think that this is, at least in these regions, right? North, Central, and South. And I think that this is because once the companies in every European country become invested by specialized VCs and not just local VCs or non-specialized investors from the country, and these VCs, these specialized VCs, come from different European countries. So the typical situation in which a syndicate is built with investors from France, the UK, Germany, the Nordics, Spain, whatever, then the valuations will be very similar, because at the end of the day, all of us have more or less the same criteria, right? So probably what we are seeing now is that the valuations are more or less homogeneous, and I think this trend will continue with other countries as soon as their companies are invested by international syndicates.
Okay, thank you, Raúl. Franck, would you like to add some more comments to that?
Yeah, I would say that I don't know too much the China market, but what I've seen basically is two things which are very different between the US and Europe. The first thing is that the market and the acquirers are numerous in the States and very few in Europe, which means that for the startups, the M&A way is very difficult, and even the investment pathway, because having less investors, sorry, the market is very important. So the market for the startups is easier in the US than in Europe. Then you have the acquirers. There are more acquirers in the States than in Europe. So the exit for the investor as M&A is always or very often in the US. And I'm not again talking about the China, because I see some acquirers from China emerging, but I don't know too much, so I'm not speaking about China. But there are more acquirers in the States than in Europe. So that means that for any startups which is growing in Europe, they have to consider the US market. Okay. The other point is that there is also more investors in the US and a higher or stronger tradition to invest into innovation from the financial market. So that means that when you are a startup in the States, you have plenty of investors from the early stage to the late stage. Even when you are listed in Europe. I've been doing 6 or 7 IPOs, and I can tell you between 500 million euros and 1 billion, there is no one in Europe.
Okay.
And in the States, it's plenty of people. So that means that there is a growth which is possible in the States, which is not possible in Europe.
Okay.
So, and it's probably the reason why the valuation are higher in the States.
Okay.
The number create the valuation. I mean, if you have plenty of venture, plenty of investors, then the valuation are higher.
Okay. Thank you, Franck, for this very interesting demand and offer topic on markets. And before going to the Q&A, so I'd like, and we had comments also concerning convertible notes. So I'd like to have from you some advice on other tips, financial instruments worth spreading. We discussed convertible notes, are also the simple agreement for future equity, so the safe agreement. So what's your view on that? And Dominik also mentioned that the agreement, shareholding agreement is really important. So what's your view? Dominik, tell us. Some modalities, some technical things worth spreading.
Yeah, I agree. Shareholders agreement is really important, and you need to carefully look at that. And of course, convertible loans, they can be interesting for you. I mean, if it takes, for example, if it takes a little longer, the finalization of your round, the negotiation, or if you as a founder are also able to actually give a convertible loan into the company, then usually this comes with a little bit of discount also. Yeah, this you can negotiate because you take earlier higher risk, and then it's okay. But there are many things that you can do. I mean, in the end, I would always try to have the process as lean as possible, because all these contracts make it more complicated, for sure. But it might be very well a very good thing to do. And now we're coming to the equity part. So this, if you already today, I don't know how it is in other countries, but I think it's quite complicated to negotiate that, because the problem here is that if you already say, okay, with the next Series C or Series B or Series A, if you do that round, I want to have a non-dilutive clause in there for my shares. That is something tricky to do. I mean, it's not impossible, but you really need to have good arguments to be in the position to negotiate that, because there are new people usually coming into the company, and they don't need to take that. They can just simply, that's you decided on that. It's not us. I don't want to take that. And if you're then in a not really optimal position, then this might really be a problem. And this is usually the argument that is coming against that, and that makes it a little bit tricky.
Thank you, Dominik. Raúl or Franck, any advice on that, on modalities of shareholder agreements, think that would be worthwhile spreading?
So first on your, on the two topics that were raised on the simple agreement for future equity and the convertible loan. So for the first thing, the simple agreement for future equity, I mean, that's fine. That's something that could work for seed rounds. But the concern here is that at the end of the day, you will just postpone the valuation discussion to the next round, right? And then depending on who leads that round, if it's a specialized VC, non-specialized VC, other type of investor, then you will have the discussion at that point in time. So then for the convertible loan, I think that the same applies if it's done at the very beginning, right? So at the time of the first, when the first money is raised in the company. But on top of that, I think it can be more cumbersome for early stage investments, and probably will erode, probably not, it will erode some value from the founders because it comes along with a discount rate and an interest rate and so on. Obviously, if it's just to help the company until the next round, then I think it will be extremely helpful. And in fact, it can be used to justify a higher valuation because with that money, you can generate more value, right?
Okay.
What is clear is that I think that the investors, and we do it always, have to keep the founders motivated, okay? The founders and the management motivated. So that can be done, of course, via an ESOP that we always put in place if it's not there. And it can even be done with a carve-out, setting up a carve-out for the key employees or founders if at the end of the day they end up with a very low stake in the company.
Okay. Excellent. Thank you, Raúl. Franck or Daniel, would like to add some more comments to that or answers to this question of modalities or shareholder agreement?
Well, first, on the shareholders agreement, again, it's a discussion between entrepreneur and there are usual trends, usual things, but it can be discussed. And I think, again, it's a negotiation. So it has to, it's under discussion. Then for the BSA or convertible options, usually I don't like to do that at the early stage. As a first investment, I don't think it's a good idea. I think we need shares because we need to be at the board as a shareholder, participate to the shareholder agreement, the shareholder assembly, sorry. So I think it's a tricky thing to do such things at the early stage. Then I've been doing that as bridge financing because the company needs to prepare a round, they are late or whatever. Okay, but then when we do that, it must have a price.
Okay.
So there is a price of doing that, a cost, I would say.
Yeah.
So that means that there are discounts on the coming round. So it has to be negotiated after with the new investor that may don't like that, etc., etc. So the simpler is the best. The simplest is the best. I mean, shares is the best. Usually.
Thank you for that. And by the way, we are really happy to have you on board because us as Angel Santé, we have really the same position as yours concerning safe agreement. Daniel, before we switch to Q&A, would you like to add some more comment on that? Daniel?
Yeah, I'll give one comment. I think Franck and also Raúl gave very good answers. So basically, some of the pushback and not being on the board, etc., is very valid a point. And using it correctly sometimes can be good for, to generate more data and to have a higher raise in the future. One, I guess, special thing that I can, introduce is something called, it's not as common in the US or Europe. And we've actually had a lot of pushback whenever we bring it up. But basically something here in China that we do because of this, a lot of heated discussion over valuation. Is something called value adjustment mechanism, and you guys can look it up. But basically, if there is something that like for the next round, a very certain milestone, or something that is related, or say for instance a KPI, it may just be related to even just financing. If that is not met, the investor can, say for instance, get more shares as compensation, and then still give you that higher valuation. And then related to that is basically kind of like tranching. It's not really tranching, but in that sense, having something creative like that is a possibility. It's not as common in the US or in Europe. There's actually a lot of pushback on that, but that is also, I guess, if you were to ask for a creative financial instrument, that is something that can be considered.
Thank you so much, Daniel, for that. We will start the Q&A. I'm really sorry because probably we would have had a 2 hours workshop that would have been better. However, we have now time for some questions and answers. So if you like to put your mic on, Caroline,
Yes. So if you'd like to ask a question, please activate your microphone, make sure someone else is not speaking, and please refer to the person in the panel that you are asking your question to, or if it's for the whole panel, and then once again, mute yourselves. And in the meantime, while we go to the questions, I would also like you to answer a very quick survey before we finish. Munya, can you activate the last survey? So do we have any questions?
Please.
Don't be shy.
Actually, you are more than 100, so everyone can really ask a question. We have
and there should be questions.
So go.
Hello.
Yes.
Okay, I'm Stefan Madens. Thank you, Angel Santé. And thank you to the people from the panel.
Okay.
Just a quick question. Animal health is kicking high, driven by therapeutic innovation. Are your structures, financing structures, are you considering investing into animal health biotechs? Thank you.
If you say yes, say so. If no, nobody is answering. Is anyone investing in?
I can answer to that question. Actually, I would say that at ELAIA we do digital on life sciences. When we say life sciences, it's not only healthcare. So that means that we consider any project considering life sciences things, including animal health.
Animal health. Very good. Raúl.
No, it's not our case. Okay. I mean, we have been approached by several companies, but unfortunately not. And I think it's an interesting business, but not.
Okay. And you, Daniel, probably do that?
Yeah, it's not our strategic fit. We've also a lot of grew up and approached by a couple companies. There is a couple where we're interested because China is a little bit special in that sense. Like say for instance, pigs were the highest, I guess per capita of pig. Yeah. So, but so far, no, we've considered, but yeah.
Thank you. Are there one last question? We have 4 minutes left.
I have a question.
Yes, go for that.
Hi. First of all, thanks so much for the panel illuminating. My question as a founder of a startup providing pharma companies a data platform, I noticed we're currently raising a pre-seed round. I'm saying pre-seed to be, covering the board in terms of the stage. And we noticed talking to investors in the life science industry who say that they specialize in life science, that their scope does not include the more digital, hardcore software enterprise stuff. If you can comment on that. I mean, they're very focused. My experience is that talking to them, they're very focused on molecules, drugs, very kind of like, things you can hold kind of stuff, and less kind of like digital data stuff. If you can comment on that.
But I can comment on that because you have to consider that there is actually presently two worlds, the worlds of digital and the worlds of life sciences. And the things are converging right now, but it's not done yet. So that means that you will meet with your business model, you will meet some people from the digital that don't understand anything about molecules. And when you speak about molecules, they are lost in a second. But you will also meet people from the life science area, which are considering molecules, which are very strong at talking about healthcare, etc. But they don't understand anything in deep learning or whatever you talk when you're doing digital stuff. So it's what we are building actually, but there are not so many investors doing so or able to do so. It's very difficult because it's very complex area each. Understanding artificial intelligence is not so easy on the technical point. Understanding life science is not easy. Myself, I'm a researcher by education, so I've done a PhD in molecular biology before doing this investment work. So, and then the people must talk together and be on the same side on the investment considerations, which is not exactly the same word. They are not exactly the same word. So it's a lot of things to converge in order to be in a comfortable position. Okay. So what you will have basically is people from the two worlds trying to converge. But it's a matter of, I think, few years. And then you will have specialists of digital life science.
So very good. Yeah, Daniel.
Yeah, I guess I would just comment real quick because we do have one company that, or it's actually two companies that had very similar situations. They were AI-based drug discovery companies, and what really happened and they actually had the second round invested already. And so what actually happened for them for this specific case was basically they actually had to choose a type of investor. And what happened was they, because of, like as Frank said, those challenges and those, I guess, peculiarities are very much real, especially with the investors of the two different types of worlds. They actually had to choose a strategy. They were forced basically by the board and forced by the investors really to kind of pick a lead in either life sciences or tech. And they were fortunate that one tech investor was able to follow along with that investor, with that life sciences investor to kind of help them with that process and have a good mix. But for that particular case, they had no option but to choose because there are two different types of valuations, two different types of teams, et cetera, that had that problem, that had that challenges basically.
Thank you, Daniel, for your
very interesting
answer. So now we are almost over. So you have -1 minute each panelist to tell me if you have to give one advice to our audience on our subject. What would you say? So Dominik, one advice for the audience.
Yeah, maybe this is also a little bit in relation to the question that was raised by Julia here in the try to find out the true market valuation of your company. Don't give away. If people ask you in early discussions about the evaluation, don't tell them.
Okay.
Also, don't put it in databases.
Thank you, Dominik. Raúl, what would you say? One advice.
Yeah, I mean, I think I always suggest the same when I am contacted for these things. I always suggest to talk to as many people as possible.
Okay.
Learn from the experience of as many people as possible. Also, to develop a network with VCs, even though they might not be the right ones for your company at that time, but develop the network. Try to understand which are their concerns and which are their needs. So that would be my main advice.
Thank you so much, Raúl. Franck, would you like to give us one advice?
I will come back on negotiation. I mean, negotiation is key, and you have to understand what is negotiation. A negotiation is good or a success when the two sides are happy at the end of the discussion, which means that if you are in one side and you are unhappy, it's not a negotiation. If the other side is unhappy but you won, it's not a negotiation.
Okay.
So it's very key when you are in early stage startups, when no real rule can give you the proper valuation or the proper context in which the investor will invest.
Okay, thank you, Franck. Daniel, would you like to give us advice?
I think to go upon all the other panelists. So basically, it's really important, I think, to plan ahead. Almost all entrepreneurs underestimate the time that is required for that, first, even second or third round of financing. And, having a plan in place will really help you with that process, including getting things like, having a budget or the correct budget and having an experienced advisor to kind of help walk you through that process. That can really help as long as, or in addition to all the other things that the other panelists said, like including, getting in front of investors at the right appropriate time to build a network and stuff.
Okay. So on behalf of all the participants, I would like to thank all of our panelists. It has been a great discussion. Would have loved to have 2 hours discussion, but now it's finished, -3 minutes. So have a very good weekend for each of you. And we say goodbye and See you soon. Bye-bye to all of you.
Thank you. Bye.
Yes,
Bye.
a huge thanks to everyone, to Alain, Dominik, Raúl, Danielle, and Franck. It was really a great pleasure having you. For our attendees, thank you so much. We hope it was informative. I am completely biased, but I thought it was a great event. So let us know. And for those startups out there that are not yet part of the Investor Network, please refer to our webpage. We'd love to have you if you are raising a seed, bridge, or Series A round. And we hope you'll join us for our next events. Thank you so much. Take care.
Thank you. Bye.
Bye.
Thank you.
Thank you.
Bye.
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 OK. Tout le monde est parti? Non?
J'arrête le recording.
Ouais.